Hey everyone, me Kevin here. Stock markets across the world opened lower Monday, heavily impacted by fears over a new strain of COVID that's making its way through the United Kingdom. And what the heck are we to do about it? Because I'm like, dude, I just want to drink some Topo Chico and go back traveling. And I want this pandemic to be over. The last thing I want is to think this is going to last even longer than it should. So what the heck are we going to do about it, especially regarding our money and our investments? Well, let's talk about exactly that in this video. Just a heads up, if you want to join me and course members in the private live streams every day the market is open, check out the courses down below. Every one of the courses, you get live stream access, the same live stream for the real estate investing, the stock group, the YouTube course, any kind of questions you want to ask, that's the time to do it. It's a great group. Email me if you want a bundle coupon code. Otherwise, the holiday code is down below. All right, here we go. The United Kingdom has already instituted stricter Tier 4 lockdowns, ending plans by the Prime Minister, Mr. Boris Johnson, to allow up to 3 households to visit each other at the same time for Christmas. This now is being called Boris Johnson having canceled Christmas. So it's kind of trying to slam Boris as if he's the Grinch that stole Christmas. He is now Boris, the man who canceled Christmas. Anyway, at the same time as these lockdowns are going into effect, Germany, the Netherlands, and France have already banned incoming travel from the United Kingdom, with additional restrictions expected throughout the European Union. The reason? A new strain of COVID that is more than 51% prevalent in all COVID cases in the United Kingdom, meaning this new strain is now the dominant strain in the United Kingdom. Now, the UK government chief scientist says there is no evidence yet that people are responding differently to this strain of COVID compared to earlier strains of COVID, meaning that this strain is not necessarily more dangerous, but apparently it does spread much faster, 70% faster, which is almost twice as transmissible as COVID strains that we've seen in prior months. This new strain first appeared in September and has now taken over. Now, the British officials do believe that it's possible people might just be more careless, and that's why we're seeing faster transmission, but right now it's more likely that it's this new strain of COVID, which has also adapted more than 17 mutations in one sort of transition, so to speak. And apparently that's a big deal in the virus world. And some of these mutations are on the spike proteins of the sort of coronavirus, which is what vaccines are designed to target. This is where, regarding the vaccine, the World Health Organization says it'll take at least a week before we know about what impact all of these mutations are going to have on the vaccine. Now, the thing is, we've got a few choices. Like, there could be zero impact and the vaccines could be just as effective, or we could see the effectiveness of these vaccines decline. And so when it comes to trying to figure out how do we play this market, how the heck do we understand what to do, what are our scenarios, here's my strategy. Now, the first thing that I like to do is I like to implement the quote that people like to throw around on YouTube and in the investing community, but they rarely actually implement themselves. And that is, be fearful when people are greedy, be greedy when people are fearful. Well, folks, if you want a chart that tells you when it is time for you to be greedy, it is this. Anytime the chart is up, you should increase your greed. It's that simple. Yes, it is, folks, the VIX, the volatility index, also known as the fear index. As you can see, we had lots of fear over here right when the pandemic started. Obviously, you could see every time we hit peak fear when we look into the past would have probably been a good time to invest. Heck, this would have been a good time to invest in any stock out there. This right here would have been a great time to pick up some recovery stocks in case you wanted to get in before the vaccine. But hey, looking back, it's always a little easier. But this is when recovery stocks had first gone to the moon right here. Then fears of the second wave came up and the market started falling again. And then, of course, we had our insane run up in August, which you could see, low fear in August. And then, of course, boom, beginning of September, we had our tech sell-off. Then we had our sell-off before the election. And since then, if we zoom out here, the market's been pretty much without fear. So personally, that makes it a little bit boring for me to invest because I love investing when there's fear. As I say, when there's blood on the streets. And when I'm talking about blood on the streets, let's just assume I'm talking about the red on the Dow and the S&P 500, right? The chart being red. Good. So all we have right now is this tiny little, oopsies, move up, which can sometimes imply it's a better time to invest, but we've got to be careful because if you missed out on this period of investing here, you would have missed out on some insane November gains in the market. And so obviously, as with everything, even though it's useful to use tools like this, you don't want to miss out the good times either. However, when we get these spikes in volatility, I like to invest. And to me, there are a couple scenarios that can play out. So let's look at the scenarios here, and it's going to tell me exactly how to invest, in my opinion, of course. If you lose money, you go bankrupt, it's your problem, not mine. I'm just a dude on YouTube. Anyway, let's hit the scenarios. Option number 1, the vaccine is not affected by the mutation. Well, in that case, if the vaccine is not affected by the mutation at all, then we're kind of back on the same road we were before. That is, we'll see recovery stocks like airlines and travel. Instead of falling like they are today, they'll probably recover. The market would probably continue on as normal, which means tech, biotech, EVs, FANG, all these things just keep rallying. Now, on the flip side, let's say the vaccine is affected by the mutation, and all of a sudden the vaccine efficacy goes from 95% to, crap, now it's only 80% effective. Or worse, 50% effective, right? These are bad. These would be problems. If it goes from like 95 to 92%, are we really gonna care? No, not really. We celebrated 90% effectiveness just as much as we did 95%. If we go down to under 80%, that's when we start going a little bit more, okay, now we're a little bit more hit or miss. Now it's gonna take longer for the recovery to actually take hold because we're gonna have to vaccinate more people to get to herd immunity. That's what happens when the effectiveness goes down. The more the effectiveness goes down, the more people you have to vaccinate and actually convince to get vaccinated. So you've got some hurdles here. In the event the vaccine is less effective because of these mutations, we are probably going to see a lot more pain in the recovery stocks. But I would expect, obviously, the stay-at-home sector to continue to do well, right? The Pelotons, the Zooms. But ask yourself this, what generally tends to go along with the Zoom and the Peloton? Like, what other sector does well in either scenario? Well, generally, tech, EVs, and green technology. Bio can be hit or miss. Lately, it's done really well. But usually, tech, electric vehicles, and green, especially with an incoming Biden administration that is going to push insanely hard for clean infrastructure, clean jobs, electric vehicle charging stations, electric vehicle pushes in general, like all of these things, no matter what happens with the vaccine, whether it's good news or bad news, my guess is FANG, tech, the EVs, and anything energy related, probably still going to do pretty well. Even the SaaS service models, like think of Snowflake, for example. I think these are going to be some companies that just have insane profitability over the next decade. So as an investor, not a trader, my recommendation is don't squander the spikes in the VIX. Look at them as yes, my turn to invest. Now again, you should have probably invested at the last spike. And honestly, if you would have followed the spike, you would have done really, really well. Because if you invested right before the election, which is something that I talked about a lot, I said, look, we are going to have peak fear before the election because after the election, uncertainty goes away. Right. Anytime uncertainty goes away, the market tends to do better. And we had a great run in this period of time over here. So if you did nail this spike, you did really well. Is this the spike that we have now anything like the last one we had? No, not yet at least. Obviously, things could continue to deteriorate over the next few days going into Christmas. We could start seeing profit taking at hedge funds. We could start seeing some other negative catalysts take hold that we were worried about for the end of the year, rebalancing into bonds with the profit taking and this bad COVID case news and bad deaths news. All these things could still come out and end up leaving us with a bad end to 2020. So no guarantees, the market's just gonna keep going. But if I had to make a choice, I would rather take advantage of the strategies that I always implement, buy on red, get in when the market is having fear, and just keep nibbling in. Take 10% of your cash, great, it's a red day, boom, buy. And buy a nice diversified, broad-based portfolio if you're newer as an investor. And if you're more experienced and you're more confident in your individual choices, then go make your individual choices. So that is the update that I have for us on what the heck is going on and my strategy for this market hiccup. Thank you so much for watching this video, and folks, we'll see you in the very next one.